Hi, my name's Simon Thorpe, and I'd like to tell you about a new proposition I have for debt annihilation. Essentially, the idea is that citizens can take over the commercial banking system's money creation mechanism and use it to fix a debt crisis once and for all. It follows on from a previous proposition I made about a month ago on solving the debt crisis. We all know that the level of debt is massive. The 27 European Union countries currently owe 10.42 trillion euros to the banks, and the interest payments on that sum, on those debts since 1995, now total 5.6 trillion euros. That's money that taxpayers have had to find in order to pay the bankers' interest charges. I proposed a solution which would be to use central bank money to cancel government debt, and this is actually possible despite the fact that many people think that it's forbidden by the Lisbon Treaty, because in fact central banks such as the European Central Bank can lend to publicly owned credit institutions which could in turn lend money to the governments. And if they did, and the governments paid off that debt, the taxpayers would save billions of euros in interest payments every year. The problem is that although it's, I think, a perfectly workable system, the fact is that governments and central banks are actually controlled by vested interests who are determined to stop any breakup of the current system. So, for instance, Mario Draghi, who's the head of the European Central Bank, was previously the European director of Goldman Sachs. He's not going to be interested in breaking up the banking system's monopoly in money creation this way. And David Cameron and George Osborne in the UK are essentially paid by the city to protect the banking sector's interests. So they're not going to be signing up for this sort of thing. So I think we need an alternative solution, and what I'm proposing today is to set up a sort of citizens bank to create money using the fractional reserve banking trick used by commercial banks, and use that money to pay off debt. So let's just talk a little bit about where money comes from. In a couple of books recently, Where Does Money Come From? It's by the Positive Money book website in the UK, and Ellen Brown's excellent Web of Debt book. It's shown very clearly that banks lend money that they don't have. They create money out of thin air on demand whenever they want to lend money to individuals or companies or governments. They just create the money out of thin air, and then they can charge interest on it. The system got completely out of hand by 2008. For every £100 that was lent, there was only about £1.50 that was backed up by deposits. There are attempts to tighten up on this with the Basel III system. Banks are supposed to maintain their deposits at 8%. So a bank with £1 million in deposits could create a further 11.5 million out of thin air and use that money to make loans. So if you've got £1 million euros in deposits, 11.5 million of loans, that's a total assets of 12.5 million, meaning you've got a ratio between the deposits and total assets of 8%. Looked at another way, if you want to create 10 million out of thin air, you just have to have 869,566 euros of deposits. Roughly, if you want to create a given sum, you require a deposit level of 8.7%. Normally what banks do is if a bank has got £1 million euros, they create the 11.5 million using fractional reserve banking, and they lend that money, sort of fictitious money, to individuals for buying houses, flat screen TVs, going on vacation, etc. They can lend it to governments, often to pay off the interest charges on previous loans. They might lend it to businesses, though they tend not to do that because it's a bit risky. But they like lending the money to speculators and hedge funds and so forth. And what they do is they'll charge the maximum level of interest they can get depending on market rates, taking into account risks. So they'll obviously charge businesses far more money to lend for borrowing money than they would to individuals for buying houses, because if an individual goes broke, they can recover the house. Amazingly, they can even create money that they can use for speculating themselves. This is quite amazing, but it apparently is true. Whatever they do, the aim is maximizing profits, and the general economic consequences of what they do are simply not taking into account. This is irrelevant whether it causes massive problems elsewhere. That's not their issue. That's not their problem. So what I'm proposing here is to use the same sort of mechanism for a very special type of bank, I call the Debt Annihilation Bank. So it's a new bank. The bank would open special accounts for cancelling debts on particular issues. Individuals and companies or whatever could deposit money into the account, and when a certain threshold value is reached, the account is frozen, and the bank would create 11.5 times as much money using the fractional reserve banking trick. And then the money that's generated that way could be loaned in order to cancel out the debt. Since banks can choose whatever interest terms they like, I would suggest that you could have a repayment period, for instance, of about 1,000 years with an interest rate of 0%. Why not? So let's take Greek debt as an example. Greek government owes 350 billion to the banking sector. To generate 350 billion using fractional reserve banking would require about 8.7% of that, 30.4 billion. So the proposition would be to create a special Greek national debt annihilation account. People would pay money into the account, and when the 30.5 billion threshold value number has been reached, the bank would create 350 billion out of thin air and use it to pay off the entire national debt. And of course the Greek government would agree to repay the sum after 1,000 years with 0% interest. Great, no more austerity. The Greek government can afford to pay for public services and so forth. No more ratings agencies. The rating agencies don't have anything to say anymore because the Greek government is out of debt. And indeed, the banks can't even complain because they've just got their money back. I mean, it's totally fictitious money, but it was totally fictitious money that was lent in the first place. And in fact, the bank exposure to debt would be reduced by this, which is a good thing. So I think, in effect, everybody wins. But of course you need the 30.4 billion to get the system off the ground. So who would be paying? Well, the fact is that Greek taxpayers paid 15 billion in interest payments to the banks in 2011. So in fact the government could make payments into the account tax deductible, or at least reimbursable, once that threshold has been reached. In fact, the 30.4 billion in donations that were required to get the system to work could be repaid using the savings of the interest charges in just 2 years. And then from then on, the government will be saving 15 billion at least every year to spend on public services. But in fact, it's a lot more than that, because the 15 billion of interest payments paid in 2011 was based on the earlier interest rates when Greece was only paying like 4% interest charges on their loans. In February 2012, the markets were charging the Greek government 29.2% to borrow money. So at that rate, the interest payments on the Greek national debt would reach 100 billion a year. That's half of Greece's GDP going to pay bankers' interest charges. So it's in very definitely interests of both Greek taxpayers and the Greek government to get this system off the ground. So a few more further details. I think the payments into the fund would be entirely voluntary. Only people who actually want to contribute would put any money in. And people could indeed withdraw their money from the scheme at any point until that threshold value is reached. And indeed, you could have a sort of like a telethon type campaign, where you have the sort of clock getting closer to that 30.4 billion value, and it could actually work very well with the public getting really interested in this. Of course, once the mechanism is activated, the money, it's impossible to recover your money. I mean, you have to say goodbye to it. You won't get it back for 1,000 years. But I think it's important to realise that this mechanism should only be used for debt repayment. This is not a way to generate money to pay people's salaries. But when the newly created money is used to cancel debt, it can't produce inflation because the two types of money just cancel each other out. They annihilate each other. So I wouldn't recommend that this mechanism be used for doing other things like paying for current account financing, paying people's salaries, and so on. Actually, to be strictly correct, the governments don't have to find the 350 billion in one fell swoop, because they're actually paying off the interest charges at the end of each loan term, which can be 1 year, 3 years, or 10 years. So in fact, you could have a system where every year you're trying to raise enough money to pay back all the debts that are coming to term at the end of that year. So it could all be done incrementally, if you like. Now, I've been talking about using this to cancel out government debt, and it obviously could be applied to all the EU countries and the US as well. But it can be used to annihilate debt at all levels. It can be used for regional governments, city councils, local councils, universities that are in debt, or companies that are in debt. The people who work in those areas could contribute to such a scheme in order to get their authorities out of debt. And I think you could also have a sort of generic fund for helping individuals, very much like a sort of a charity. You could have a committee within the bank that would decide how to use money for helping deserving cases. And a particularly interesting case, I think, is the payday loan schemes that you've got in the UK at the moment. Quid24.com has a website where you can borrow, let's say, £100 for 7 days, and then you have to pay back 110. That's interest of £4.50 and a transfer fee of £5.50, making a representative annual percentage rate of 14,348%. It's just, completely extortionate. These people could be helped by a system like this. One question is, how many banks like this would you need? And the answer is actually just one. One bank would do the trick. It could be a bank that was newly created. You can create banks, but you need a certain level of cash resources behind you to do it. And it's true that I'm not going to be able to go to a bank, go to the banking authorities and say I want to create a bank. They'd probably say no. But actually, you could use a previously existing bank. There are thousands of banks in Europe. And all we have to do is to try and find one where the owner of the bank is actually maybe feeling a little bit guilty about what's been going on, and who's prepared to play the game. So a few final thoughts. In the end, I think the ability to create money should be taken away from commercial banks. It's an insane system letting commercial banks create money out of thin air. Money creation, which is needed for the economy, should only be possible by central banks under the direct supervision of democratically elected governments. But in the meantime, I think we should be using the fractional reserve banking trick to clean up the incredible mess left by decades of irresponsible lending and borrowing. And essentially what we've got is a do-it-yourself mechanism that can be used by citizens to break the stranglehold of the banks. If you like the idea, then do approve of the video and send it to your friends. If you're interested in more information, you can always look at my blog. Thank you very much for listening.